All right, all right. It's J-Rod here. I'm here with Zach Scheit to cut through the noise and get right to what matters. Every month we have a lot of stuff going on, but this month, September, always a dynamic month. Let's put it that way for the financial.
Yeah,
Zach, how are you, man? What do you got on your plate today?
I'm good. I'm feeling healthy. We're talking about the September slide. That's what a lot of people in the news are talking about. We've had some volatility already here in the market, but today I want to talk about something a little bit different. The V word, visibility instead of volatility. So we'll switch things up a little bit.
Okay.
But you know me, I'm a little bit of a visual person, and sometimes life stories help to kind of clarify what's going on in the market, at least for me anyway. And today it was funny. I started the day, got up really early, went for a run with my coach and his fiance at our national park that's close by. And when we started, the sun wasn't up yet. I forgot my headlamp, and we were running on dirt trails with trees and rocks and roots. And thankfully, Crystal, my coach's fiance, she had a really big headlamp, and so we were able to see pretty well. But even in that situation, the shadows and everything that were cast as we're running through the dark, it was hard to see exactly where we're going, exactly where I wanted to put my foot, exactly where the twists and turns were on this path, even though it was a path that I've run on literally hundreds of times before. And on the way out, I actually tripped on a root. I almost fell. Caught myself at the last minute, and we kept on going. But then on the way back, as the sun came up and we could see a lot better, I saw that same route that I had tripped on, and sure enough, it wasn't anything. It was just a little bump in the road, easy to step over. And I thought, it's kind of interesting. It's a little bit of a picture of what our market is like right now. We've come out of the initial coronavirus crisis. We're not in lockdown anymore. We started to see restaurants open. People started traveling again. The roads filled up. Now we're kind of in this place where it's the first time during our recovery that we don't quite have the same visibility that we had before. There are a lot of questions about how is this economy going to recover? What's happening to the service industry? What will happen when people go back to work? Will they go back to work? Who's getting the vaccine? Who's not getting the vaccine? There's all these kind of questions that we have going on. And then with the Delta variant starting to pick up, and hopefully we're starting to see a little bit of a peak in the numbers for the Delta variant. That's very encouraging. But it's that kind of hard to understand exactly what's going on. And that's what's got investors somewhat concerned right now. And hesitant to put too much money into any one place just because we can't quite see what's going on. Now, one thing that I can tell you very clearly is that we are still on the path. It's just like, we're tripping over that route, but we're still on the path. We know that we're still heading towards recovery. We've seen some promising stats with the Delta variant, and we've also seen that, there's a lot of people who have gotten this new variant who are vaccinated, who have been able to work through it and have a much milder case, and that seems to be the overall trend. So I think as the sun comes up, if you will, as things start to become a little bit more clear, we'll look back on this time and we'll realize that the economy was still trekking along, that we were still making progress, that that things were still continuing to move forward. And yes, there are twists and turns, but that route may not have been as big of a deal as we thought it was when we were there in kind of this low visibility period. And so I think right now, as investors, we can be confident in knowing that the economy is recovering, that we're in a good place. The market's still, very close to new all-time highs, but it also pays to have a little bit of caution. When you can't see, you run a little bit slower. You take a little bit more off the table as far as investing is concerned, and just make sure that you're not being too aggressive to the point where if we get a little bit of a pullback, it's not going to hurt your wealth or damage your long-term ability to generate the income that you need to retire with the funds that you need. And so there's a little bit of that caution that I think is wise to have, but we don't ever want to operate in fear. I actually had a long conversation with a buddy of mine who just sold a business. He's an old high school friend of mine. I'm so excited for him. He's done really well in his career. And we were talking about many of the situations that are going on right now. And he was saying that when we make decisions out of fear, it's almost always the wrong decision. And so I do want to encourage us as we're making these investment decisions, we're not going to operate out of fear. caution is one thing, but we're not ever going to operate out of fear, because that just puts us in the wrong place, and we wind up getting out of great positions at a time when we really should be thinking about, taking advantage of discounted stock prices. So as we think about visibility, let's take a look at a few of the important areas of our economy right now and kind of just see where things are so we can get a better picture of what's going on right now. The first thing I wanted to talk about was the jobs report that we got just at the end of last week. We got the report that said that the economy created far fewer jobs than we originally expected. This was frustrating. A lot of people were worried about it. A lot of people think that might be, the first indication that things are not all right. And many people pointed to the Delta variant and how it's spreading throughout, our country and in other areas of the world, and said that's why there weren't as many jobs that were created last quarter or last month. I've got a little bit of a different perspective, and it's backed up by data, and it's shared by a lot of the smart people that I follow, and that as I've done my research, I think we've got a lot more going on than just the Delta variant. The big thing that I want to point out is that we still have a labor shortage. So it's not a situation where companies weren't making money and so they couldn't hire people, or their businesses weren't growing and so they weren't hiring people. Companies are still desperate to get people to come work for them. So it's not a situation where our economy is slowing down. It's a situation where there just aren't enough people that want to work, that are willing to fill those jobs. We saw a new high for small business jobs posting. So this is not just me thinking about things. This is not just me talking to people and saying, that this person's experienced one way or the other. This is in the data. The small business jobs postings hit a new high. And in the surveys that they take across the country, there's a question that they ask about whether positions are hard to fill, and they make those answers into an index. And the index hit a new high as far as small businesses saying, we just can't get people to come work for us. We want to, we're trying to hire, but we just can't get enough people on board. Another statistic that economists look at is the labor force participation rate. And, we don't want to get too far into the weeds with all the details and nuts and bolts, but the bottom line is that the number of people who are able to work, but are just not actually, they don't really care to look for a job or don't care to be in the workforce, that number is surprisingly high. It's much higher than it has been in history. So we've got a lot of people on the sidelines who just aren't really caring about working. And that may be because of the Delta variant. It may be because of unemployment benefits that have come through. But at any rate, as these people decide to step back into the market, step back into jobs, that will be a big part of helping our economy continue to grow. And that leads us to the next point that I wanted to talk about, and that is policy. And what do we say, J-Rod, here? We're not Republicans, we're not Democrats, but we are market investors. And so we want to know what these guys are doing in Washington, because it matters for how our investments work to help build your retirement wealth. So we won't take a partisan view on anything, but I will tell you that this weekend, Labor Day weekend, marked the end of 3 federal assistance programs: the Pandemic Employment Assistance, or PUA, the Pandemic Emergency Unemployment Compensation, PEUC, and then the end of the $300 per week federal Pandemic Unemployment Compensation Program. Bottom line, the government's not handing out as much cash starting this week after Labor Day. And so a lot of the people who have been sitting on the sidelines saying, I don't really need to work, and maybe I'm concerned about the variant, or maybe I'm just enjoying not having to work right now, that's all going to change. And that's a direct result of this change in policy in Washington. So in some ways, I'm a dad, J-Rod, you're a dad. It's sort of like taking the candy away from the baby, or taking the punch bowl away from the teenage party, or whatever you have.
Cell phone now, right?
That is true. No kidding. But it's one of those things where there's been a privilege. There's been something that the market has been accepting, that our economy has been accepting, that people in the workforce or out of the workforce have been accepting. And now this is changing. There's going to be some whining. There's going to be some complaints, and some of them are legitimate and some of them are not. And my heart goes out to people who we're counting on this assistance and they can't go back to work. And I think that, I want to be cognizant of that, but there are many people who can go back to work. And now that this assistance is being cut back, we'll see a big jump in the labor force. So I'm expecting when we see the September numbers, the October numbers come through, that we're going to see another continued rebound in new jobs created here in the US. And let's keep in mind that last month's report, it was a disappointment, but it still was over 200,000 new jobs that were created last month. So we're still moving up, we're still improving. We're just not improving at the rate that people thought that we might have been. And I think that's going to return now that this assistance will be taken away. One thing to keep in mind here is that already we're at a place where we have record household wealth, near record savings, and most or very many American households are flush with cash. So we've got all this money that's been plowed into the economy, that's been put into, like, directly into Americans' bank accounts. And now these people are going back to work, and they'll be earning income from that as well. And so we're in a place where we can expect to see consumers spending a lot of money, and that's really good news for many areas. Or initially we might think of retail, but I think that now that we're kind of coming out of this coronavirus crisis, the big area that we're going to see people spending is on experiences and on getting out and being with other people. So that's great news for travel, leisure, restaurant stocks. We'll talk about some of those here in just a minute. Moving along to some of the other topics that are really important for us to kind of keep an eye on in this market. Inflation. Inflation is still something that we need to be concerned about, and it's something that I feel like has gotten it's taken a little bit of a backseat just over the last 2 weeks, and maybe that's because of the Delta variant picking up and people kind of thinking that the economy is stalling, which it really is not. The data doesn't show that the economy is stalling. Inflation is still a major part of what we've got to deal with. Just a couple of weeks ago, we saw Walmart increase their payments that they're making to all workers, from the people who work on the floor to managers and so forth. There was a huge wage bump that Walmart made, and this is one of the largest employers in the United States and really around the world. So if Walmart is having to pay a lot more, and they're also throwing in a lot of other freebies like college tuition and other benefits that they're giving to their employees, that's what they have to do in order to keep people in the stores working, filling the shelves, greeting their customers. And if Walmart is doing that, then that many, many, many other companies across the country are having to offer more in order to get people to come in and work for them. So that's not all of inflation, but think about that. When you start paying people more money, those people now have more money to spend. They're going to go and spend that money on products and services. Those products and services aren't necessarily available. We've talked about that a lot. There's supply chain bottlenecks. There's not enough people working in the service industry. So there's not as much available for that money to be spent on, which means that people are willing to pay more and more and more in order to get ahead of the line and to say, I really want that computer, or I really want that refrigerator, or I really want that cruise ship spot to get one of the first trips out now that these ships are sailing. So all of that is driving prices for many, many, many things higher. And that's something that I think we're going to have to continue to prepare for when it comes to managing our wealth. So far, we haven't seen a huge jump in gold and silver prices, and that's a little bit of a conundrum. But we also know that gold and silver, they run in spurts. So you have a season where you have several months where gold just ramps up and moves sharply higher for for a large percentage gain. And then you can have times where gold and silver will trade sideways for a little bit. And that's exactly what we've had recently. So I think we could be setting up for a new rush into precious metals. I wouldn't buy aggressively until we start to see that price movement actually break some of the previous highs and start moving higher aggressively. Now, I do think that gold and silver are great long-term investments. So if you have some gold and silver, either as a financial investment, maybe you own gold and silver stocks or GLD or SLV or some of the ways that you can play it financially in your brokerage account, or if you own physical silver, physical gold, I still think that's a great long-term position to hold. But we've talked about there are certain times where when inflation really picks up, it makes sense to add a trading position, if you will. Maybe something that you hold for a year or two and really take advantage of the price jump that comes as a result of inflation. So right now I'm saying keep the physical long-term positions that you have. That's good practice for long-term, and be ready. Have your finger on the trigger for once we start to see gold and silver move higher, then we'll want to jump into more aggressive positions there and kind of trade around this opportunity to make money as inflation pushes those prices higher. I may have gone a little bit long, J-Rod. Sorry about that, but gosh, there's so much to talk about, and I wanted to make sure that we kind of had a chance to maybe it's shedding some light on this trail so that we have that visibility and we understand what's going on and we know where the best opportunities are. So that's what I had for today.
A lot of great information, and this is not stuff that you're going to hear from your financial advisors. So this is, I think it's, in my opinion, it's worth going over in time so you have a chance to really let people know just how important this information is.
Sure.
Well, Zach, again, that's about all the time we have for today's call. Do you want to have any final thoughts before we wrap up?
I would go back to, we've said this before, but let's look at our investments the way that a professional would. So it's sometimes easy to get excited about one name or excited about one area, but as a professional, you'll always be looking at how do I manage my risk? How do I grow money steadily, grow my profit steadily? And how do I look ahead towards, the income that I need and plan for that ahead of time? So if we as investors look at our own accounts that same way, instead of having fear, instead of having greed, instead of letting our emotions play, we'll wind up in a much better place. And that's really kind of my job, is to help you look at things from that much more professional state of mind.
Absolutely. We're always happy to have you on the phone. Well, thanks so much, Zach, for another great call on the books. I'm J-Rod, and we'll see you next time.
See you guys. Thanks for being on the call.